Dow off 112 points, and that was the good news, guys. A lot of ugly stuff out there. So let's go to our investment pros. First up, my man, Fox radio talk show host Tom Sullivan's back to bring some of that, calmness to the set, if you will. Jim Frischling's back also, president of NewOak Capital. Jim, nice to have you back. Scotty Nell Hughes. Jim, I like that point. One thing for me, I tell people, it never matters how the market opens. It matters how it closes. And to Matt's point, it has been a disaster on these closes. What's going on?
I think the swings today had a lot to do with really Russia, which is obviously being impacted dramatically by oil and sanctions and whatnot. Stories about Russia 1998, contagion, and then you have the U.S. market, absolute safe haven, good retail numbers expected. All right, slow but better manufacturing numbers, new home construction starts, housing. Yeah. So U.S. safe haven, Russia contagion.
All of that stuff was out, though. Whether it's 50, whether it's 60, whatever it is, as long as it stops getting hammered every single night. Every time we wake up, it's in a desperate straits. That's the problem, I think.
It's a perfect storm for oil right now. Even Veni came out. They're not going to raise gas prices. Veni's going to have some social unrest coming, given the difficulties in oil. So I really do believe that you got the issue of oversupply, and now you have the issue of the slowdown. So it's still a perfect storm for oil. I don't think we found the bottom, and I think today proved it.
I got a feeling that the corporate world's got its act together, Jim. Outside of the Fed, though, what do you see? Everyone's now saying maybe oil is the black swan, but what could derail the positive 2015?
Failure to meet the corporate earnings, which I don't think is going to happen. But I think if U.S. companies can't deliver on the forward-looking expectations, that could cool it. I think Fed moving rates sooner. Matt mentioned it. That is a concern of everybody. And when the Fed does move rates, the last three times it happens, 94, 99, and 2004, the equity markets lose 4% in the first 3 months. And then lastly, continued uncertainty and I dare say weakness, Europe, Japan, and China. Those are the three things that derail it. But again, I'm still optimistic.
The hard part, though, no, because when they first implode, everyone goes down. Like Microsoft went down, Intel went down. It's knowing which ones to hold and being able to bite the bullet. I mentioned yesterday, I sent out alerts to take a bite the bullet on several things. People were pissed. They were upset. Now, in a way, I don't blame them. I can't be perfect, and it's so hard. But when you eventually have to bite the bullet, it does hurt.
There's certain states whose their own GDP is so dependent on oil, they're not going to enjoy this bubble, okay? They're going to feel not just pain in their portfolios, they're going to feel it in their local economies. And
halo effect.
We may be able to pick up some cheap paper. For the folks in Texas, for example, there's a bloodbath.
Guys, next and last real deal. All right, Jim, let's just talk now about this action in general. Is it an overreaction? Every day it's easy to come on TV, and almost everyone that does now says the same thing. We'll have a 5 handle. I wouldn't be surprised at a 4 handle. It's a pretty easy call when they drop $3-4 every day.
I do think we are in the overreaction category, and what I mean by that is Tom mentioned all the debt on books, whether it's in the junk bond market, whether it's in the leveraged loan market. The fact is you have to look at each of these companies under their own merits. Okay, there are certain triple C junk companies that don't have maturities on their debt for years, or the maturities are manageable. So if you believe oil is never going to go up again, then that's going to be an issue. But if you believe oil will rebound, they have time to manage. Many of these companies have hedged their oil positions. So again, I think that will there be defaults? Yes. Will it be the massive capitulation that people are screaming about? No.
But nobody knows exactly how to sense, and that's the big issue. The uncertainty is why people sell first and then ask questions later.
And the Saudis are going to sit there and hold their cards because they want to either do in the small producer here, or they want to do in Iran, or they want to do in Russia.
Or all of the above.
I'm just saying, don't underestimate these oil companies. Many of them are hedged. Many of them have diversified businesses. And many of them, again, have manageable maturities.
Can anyone explain? I like what he said, though, the store experience. I tell people all the time, I remember when Walmart was going to put out all the grocers out of business, you started going to these grocery stores, the Krogers of the world. What did they do? They widened the aisles. They brightened it up. They had fresh fruit, fresh vegetables. Next thing you know, these are better investments than Walmart. So what do you make of the anecdotal evidence here that Rite Aid might be a play here?
No, I think, they did well with margin expansion, and now it's been the same store sales expansion. And I think it's the customer experience. I also find a little bit interesting CVS, Rite Aid, the tobacco issue. I think CVS, going back to it, it's amazing how they're winning, having given up the billions of revenues that they did, and they're the only one that's really in its class doing it. So they stand alone in that sense, and Rite Aid again.
I like CVS with those health. I get a lot of people asking about these real estate investment trusts, and I got to tell you, seeing the way they hold up, seeing these big, fat, juicy dividends, Jim, it's hard to argue that these aren't maybe the best investments out there.
I think they have been. But you kind of commented what made them so attractive, and it was the yields. And these are highly sensitive to rates. So if we believe believe the U.S. economy is getting better, which I do, and we talk about rates are going to rise, there will be a little volatility there, and they'll be under some pressure. These are highly levered vehicles, and like alcohol, leverage makes good times better and bad times worse.
But a lot of people, a lot of investors are looking for coupon, and that's what they're going to get.
But in a rising rate environment,
you guys remember there was a story for 3 or 4 years, though, master limited partnerships, MLPs had big coupons, gigantic yields, and they were unstoppable, and everybody out there bought them. In the last 2 years, they have gotten absolutely decimated. So there is risk. You cannot say these are not riskless.
No, absolutely. And again, when the rates increase, they're going to have a hard time refinancing. They claim to be able to pass it to the tenants. That's a maybe. And by the way, on Alexander's, if you want to know where their space was, go check out the Bloomberg building over on 3rd Avenue.
I was going to say.
I didn't want to give Bloomberg a shout out. I was going to say maybe Le Cirque. The Le Cirque, yeah. Jim, talk about shaking up his cabinet maybe. Same kind of thing we saw play out in that year. They shook up the cabinet. There were a whole lot of other issues. They got the bailout, and it still didn't matter because in August 17, a bad number for these guys, they had the Russian flu, which really was a scary period.
And I was in the emerging markets on the debt desk, living that and trying not to catch falling knives. I do think he's in the corner. Military action is not the play at this point. However, reneging and defaulting on debt is I think, a very real possibility. Their reserves are in better shape. They spent a lot of money.
Real quick, because they're giving me the rap signal. If they default on their debt, what does it do to our stock market?
The initial move, an absolute 10% pullback at least.
Ruble worthless hype.
It acts like it. I think there are 33 non-soda companies out there that do $1 billion a year. Coke owns 15 of them. I mean, these large beverage companies are looking for something to bolster them up. Monster's got to be in someone's crosshairs, Jim.
I was going to put this in the GoPro category where I took the contrarian view and I've been wrong. I think there's a lot of momentum behind this stock, so I shouldn't disagree, but I am in Matt's camp. I think the PE is just exceptionally high. I think the Coca-Cola issue is starting to cool off. I'm just a little worried that on any pullback, this stock could be on the wrong side. But again, a lot of momentum, and it's a great company, so it really is.
People outside this country call us the cowboy culture, the arrogant culture, the baby Huey with this young upstart nation with all this power but doesn't know what to do with it, and we clumsily beat up everybody else around the world.
Actually, the belief that you can have better days, the belief that you can actually lift yourself up, I do think is paramount. Look, words get misused all the time, and culture, I think, is getting misused. It does evolve, to Tom's point, but I will tell you, a lot of words get misused. Partner gets misused, family gets misused, and these are pretty important words. So I think it's how you embrace it, how you take it.
Guys, time now.